Good morning to everyone, and thank you for joining. We appreciate your participation and welcome you to the webinar. What is a statutory auditor and why is it important for our company? It is my pleasure to introduce Francisco Segura, audit partner in J.A. Del Rio, with over 25 years of experience in the areas of auditing, compliance, financial accounting, as well as financial statements. We also have with us today Fabio Osorio, tax director of our Colombian office. He has extensive experience in international tax, providing tax advisory, consulting, and diagnostic services in due diligence. Thank you for being with us today. Before we start, I would like to mention that please feel free to send all of your questions during this transmission, and our experts will be happy to answer them in the Q&A session. Okay, so let's go ahead and get started, and let me share the agenda of today's webinar. Number one, what is a statutory audit? How is it different from an external audit? Who is required to have a statutory auditor? Services that a statutory auditor can provide versus independence. Audit work stages during the statutory audit, and internal controls. Finally, the conclusions and the Q&A session. Alrighty, so let's go ahead and start off with the first point. This is a very important that we understand. What is a statutory audit? Fabio, can you be so kind in helping us with this explanation, please?
Sure. Thank you, everyone, for joining us today. And talking about the statutory audit, this is a figure contemplated in the Colombian law, basically in the Commercial Code Article 203, and by the law 43 of 1990. In which are detailing all the functions or the activities that the accountant has to perform as acting as an statutory audit. So through this law, as we're gonna see through this presentation, there are many differences between being a statutory auditor or being an external auditor. It is important actually as well to mention that it is an overlooking body, the statutory audit, which it is interested in community under the direction and responsibility of the statutory auditor. So through the following slides, we're going to explain deeply what is exactly the statutory, what does they do, has to do, and what are the reports that has to be issued.
So thank you for that intro, Fabio. Now, let us explain the differences between external audit and statutory audit. I know we will provide a lot of clarity with the following information. Go ahead, Francisco.
Thank you, Alejandra, and welcome everybody. Well, the first thing I would like to mention is that the purpose of any audit is to test the information that is being provided. That's the main objective, and the reason to carry out an audit is to provide confidence on the information that is being reported. With that said, the external audit can focus with different approach, and this approach are managed and agreed with administrators or the board of directors or the stakeholders of the information or the entities. Then it is important to be clear on what is the purposes. If we can run a statutory audit on the full financial statements according to the specified framework of financial reporting, it could be US GAAP, IFRS, local GAAP, or we can run a specific scope on certain accounts and with certain extent, including or not including internal control as part of the reporting scope, or even perform a less specific audit like a review report, which is less extent, less effort, and then provide a lesser level of assurance on the financial statements being reported. In that regard, it is important to note that in the case of the external audit, we follow the international standards on auditing, and even when we perform certain procedures on the compliance with local laws and regulations, it not necessarily means that we will issue a specific report on that compliance. So I think, Fabio, can you move on the statutory audit requirements at Colombia?
Yeah, sure. And so, as you explained, as I mentioned before, there's differences on what is an auditor, an external auditor, and the statutory auditor. In this regards, in this case, for a statutory audit, it is compulsory and operates by the mandate of law. In Colombia, as I mentioned, there is a specific law that describes what are the activities that the statutory auditor has to perform. It is an integral all the areas and operation of the company. The external audit can be just for specific areas, as Francisco mentioned, but for external, the statutory audit has to be all the areas of the company in order to focus on how are the figures and the confidence of those figures, and of course the reasonability of the financial statements. One of the other things that it has to be considered by the statutory auditor is safeguard of the interests of the associates. So it has to report any distortion or any irregularity that might be on the process or the financial statements. It is subject only by the shareholders meeting, and it has a board and a permanent scope according to what is prescribed by the law. So it is needed to always focus on what the law mentioned for the Colombian purposes and the statutory audit. And as I mentioned, it is more determined the reasonableness of the financial statements and authorize them with the statutory auditor's signature at the end of each year. The signature, the auditor will be signed the opinion and the financial statements as well. In the opinion, as we will describe on the next slides, it is included the reasonability of the figures or not.
Okay. Well, thank you for that comparison, both of you. Now, this gives me another question. Who is obligated to have a statutory auditor?
Yeah, talking about this, and as I mentioned in the next slide, we will see the main, I will say, main companies that has the obligation to have a statutory auditor. One of them is, I will mention from the beginning, as soon as you setting up a company, which is a stock company or a branch of foreign company, it must have an statutory auditor from the beginning of the setting up the company. Whereas there are other companies that it might have obligation in the further years. For instance, companies that has more than about $1.2 million on gross access, or has raised approximately gross income on $700,000 approximately. It will have the obligation to have a statutory auditor. As well, the companies what has public capital, for instance, the mixed economy companies has as well that obligation. And the other companies are the associations, foundations, and common utility institutions, trade association, mutual funds, chamber of commerce as well. Those are entities that have an obligation to have a statutory auditor in Colombia. So in the next slide, we're appointing of the statutory auditors.
Yeah, well, thanks, Fabio. I would like to say that if in the audience you are an obligated company, do not hesitate in sending your questions. We're happy to clarify them. So in the meanwhile, let's talk about timing. When should I appoint a statutory auditor and what is the scope of their work? Fabio, can you help us with that, please?
Yeah, correct. Thank you, Ali. And based on the law, as I mentioned in Colombia, that everything is included in the law. The provision of the Article 204 of the Code of the Commerce mentioned that the election of the statutory auditor will be made by an absolute majority of the assembly or the board of the partners. So normally, who elect the statutory auditor won't be the managers or the administration, but has to be for or by the assembly or the board directors. And the statutory auditor period will be annual. So even if the obligation to elect or design or determine who will be the statutory auditor, it is in the first quarter of the year that when the assembly is determined that the statutory auditor will be audit all the whole year from January to December, but the designated will be completed normally in March, that designated. So it will be for the whole year, and normally it will be designated in March. So in the next slide, we're gonna detail the scope that the statutory audit has to be contemplated. First, the review of the financial statement as established in the number 7 of the commercial article mentioned before. At the end of each fiscal year, the statutory auditor is obliged to issue his or her opinion, which include the opinion on the financial statement reasonableness. To comply with the obligation, the statutory auditor must obtain adequate knowledge of the entity, carry out of the risk assessment, execute audit procedures, and collect all the evidence. That is mentioned that in this case is pretty similar what the external auditor does because it has some specific considerations and a stage to do the audit process that actually Francisco is going to explain in the next slides. So what should the statutory auditor do? The statutory auditor must ensure, as we mentioned, that the entity complies with the provision of by law, the shareholders assembly and the board of directors, as well as when the statutory auditor becomes aware of any irregularity, must inform written to the board or director or to the managers, depending on the matter questions, telling about that irregularity in order to them has to take any decision or in order to tackle any of those irregularities. The statutory auditor must collaborate as well with the government entities in case those request to explain a little bit the features of the company or any of the irregularities that the auditor has been aware of that. So they has to send some reports before the government, but as soon as they request that. As well as in the next slide, other of the things that it has to be considered is that the statutory auditor has the task of examination, that the entity property keeps the minutes and the meetings of the shareholders assembly. Everything of the decision of the board has to be considered on the minutes of the meetings, and the auditor has to review those minutes in order to consider if the decision made has been already executed or is any irregularity on the execution of that. The statutory auditor has the obligation as well to call the shareholders meetings when there are matters of such importance that they must be communicated to the members of the shareholders. As we mentioned before, it is important that in any case, the statutory auditor has to let the board know any issue or irregularity or anything that it might affect the opinion or it might affect the financial statements reasonability. As well as the auditor, finally, the statutory auditor must also fulfill the other function assigned assigned to him by the laws and the statutes of the entity. So, in any case, for the case of the statutory auditor, it has to follow all what the laws and the rules of the law, and as well the status of the entity.
Thank you, Fabio. And as you mentioned, the statutory audit and external audit financial function are pretty much the same, but there are certain differences that are mandated by laws in each local country or state or whatever. But the full performance of the audit seems to be in these four phases: planning, evaluation, execution, and conclusion. As mentioned before, the main objective of an audit is to provide confidence to the stakeholders of the financial information. So let's move on the planning. What do an audit does in the planning phase? In this planning phase, what must be done is to understand the commitment that we will be performing. As said, it's a full audit and a specific scope audit or review, or in the case of statutory audits in Colombia, we will be always performing a full audit scope. That makes us to agree with management on the different phase of the performance of the work, the resource that we will allocate based on the extent and requirements of the engagement in terms of expertise or special matters that we will be facing. We perform a work plan and schedule to achieve those tasks in the plan. Survey of the core company processes. That means understand the way they perform transactions, the way they account for those transactions, and important is the control, the internal controls, and the control environment that they have to rely and determine the extent of the detailed testing we will perform. As well, we will be evaluating the technical issues like accounting, a specific matter from the industry, the taxes, or the specialists we must be involving. For example, in the case of a long number of employees with a long stay in the entity, we might be involve the participation of an actuary to assess the labor obligation of long term, like seniority or indemnity, the review of journal entries to narrow testing to specific risk areas, as well as determination of significant accounts or significant events during the year that we will be auditing. In the next phase of the audit, that is the execution, we will be performing detailed tests of income, expenses, costs, and confirmation, test the balance sheet account that we have determined as significant or that includes a high level of risk of error or material errors to be reported. As well, we work plan and anticipate the closing matters to discuss this with management, establish the level of adjustments or the path of action in that cases. It is important, and we will talk later, for the auditor to keep independence in this matter. So we might find some adjustments or errors that need to be corrected, but we as an auditor cannot decide if the company must or will adjust or correct the errors. our obligation is just to inform, and we will discuss this later. And finally, in the execution phase, what we do is to connect all these procedures in the income statements and the balance sheet as a whole, and conclude on the compliance of the financial statement with the frame of accounting or the laws that we are using to issue our audit report, and as well to issue a letter of recommendation in terms of what management can do to improve their performance for finance and internal controls, or to address the new audit or accounting requirements. Well, in terms of internal control, as said before, we can have a difference between what we do for an external audit and a statutory audit. But let's, Fabio, talk about these requirements for statutory audits in Colombia.
Yeah, thank you, Francisco. And in the next slide, we are detailing what is the internal control and what are the considerations we have to take. First of all, it's important to mention that internal control is a process that must be executed by the board of directors. It's not a such thing that has to be done by the auditor, even if it's external or statutory, but it's a special consideration that the board of directors and the management and staff even has to consider on the company, because it's the entire company that are involved on the internal control. That is very important. What the statutory auditor does is to evaluate if the internal control that the company has is appropriate for the company and for the all areas, and and will be as a support of the audit process that the statutory auditor will do. But as I mentioned, the internal control is something that the company has to consider. One of the main reference model that normally is being used by the company is the COSO or the COSO framework. This is an international framework that it has been used for years to establish and set a specific internal control for the companies. And that framework generates a common definition of the internal control, provides a structure model that helps company move towards an effective implementation of the internal control. So our recommendation for the companies always has been to consider that framework, because that will be help the companies to set an appropriate internal control for the whole company. The implementation of the internal control system allows company to strengthen and encourage them to achieve their objectives. As soon as they have an health internal control, it will keep all the areas consolidated, and the procedures that the staff follows will be appropriate, and will help the companies to avoid any irregularity, error, or any issue that might affect the reasonableness of the financial statements. So if we move forward in the next slide, we will see the stage that are considered in the internal controls, or the components, saying that per the ICS 315, identifying and assigning the risk of material misstatements through the knowledge of the entity and its environment. The auditor will obtain knowledge of the internal controller relevant to the audit. So those components are, first, the control environment. That is one thing. All those components has to be reviewed and evaluated by the statutory auditor. The control environment, the risk evaluation, the control activities, the information and communication, and of course, and at least but not last, the monitoring activities. So these components are part of the great internal control and has to be evaluated by the statutory auditor in order to consider if there's any risk, any issue, or any consideration that might affect the reasonableness of the financial statements.
Wow, well, that was a lot of great information and very interesting, Fabio and Francisco. So this next topic is crucial. Independence, key elements in the services to be provided. Can you go ahead and help us with this, please, Francisco?
Sure, Ali, thank you. Well, in terms of independence, what I said before, what the auditors provide is confidence on the financial information. And in that regard, we are required by the standards and regulators to be independent of the entity being audited. Why? Because it is expected that the users of the financial information relies on our judgments, realize that we have performed the proper audit procedures to conclude on this reasonableness of the information and to provide this level of confidence. So if we are not independent within the entity, we can be perceived like non-trustable accountant. Then there are potential risk of independences if the independence is not maintained. One of them is that the work might be subjective and not accomplish the standard required. So the assurance services are only valuable if the user will perceive us as integrity, objectivity, professional skepticism, and independence in the work we are performing. If we move forward, we will see that this independence is perceived in two manners. The first one is the mental independence that has to do with the integrity, the objectivity, and the professional skepticism. That means we cannot be influenced by the facts or relationships with the entity or the administrators. We must keep objectives in terms of the laws and the framework that we are using to conduct and lead our judgment on the information and the financial statement that we are reporting on. And finally, be professional aseptic in the performance of our work. That means that even when we can rely on the work of the audit, we cannot rely on blind eyes. We must always have the evidence that supports the judgment. That's why sometimes the external auditors and the statutory auditors are perceived like a non-flexible person. And this is because it is by mandate and part of the work that the stakeholders are sponsoring or reviews. I mean, the top management realize that we perform a review that will not be influenced by our personal relationship with their staff. So this is to keep the mental independences. But also we must be independent in appearance. That means that all facts and circumstances that comes around us make the stakeholders perceive that we are truly independent. Not just because we said that we are independent and we are integrity in the performance of work, we keep the professional skepticism, but the facts, what the others view, the others perceive from our behavior, lead them to consider that we're truly independent. So there are certain independence rules that we must keep in mind. The first of all is the period covered. When do we start the work and when we are required to be independent? For example, if we are hired as independent auditors in September and we will issue our audit report in March, we must keep the independence for all this period. But more than that, if we are auditing the 2020 year end, we have to be independent for all the periods that we will be reporting. That means that we might not be performing any accounting services or any activity that might be perceived like a management responsibility during that period. Even make a simple registry or to provide an entry to local management as part of this, how would I say, loving relationship to achieve or to approach the client could impair independence. Finally, the financial statement period leads the time when we might be independent. We will talk about this later. We also must keep in mind our business relationship. What do we do with the client? What do we do with the board of directors, the senior management, or any person that is being responsible in the preparation of taking of decisions in the entity? If for any reason we take advantage of, for example, discounts or special prices, because it is common to have certain relationships that might impair of independence. We need to look at them and see if we are truly independent. Go ahead, Fabio.
I'm sorry, Francisco. So going through that, what you mentioned, and that is important in this case. Maybe in this slide, what we are showing and illustrated what the auditor can do and what cannot do. In this case, so for independence, we see when we are an external or a statutory auditor, we cannot provide at the same time the accounting services, because that will be an independence conflict of the services between those, because you cannot be the same person who perform or do the accounting, but also at the same time review the financial statements. So that is a specific rule for independence that you cannot break. But in the other cases, you see the face is very mad or very neutral, because you can, in some cases, provide at the same time when you are an external or a statutory auditor services such as tax consulting, labor consulting, or for instance, you can at the same time provide transfer pricing services and being an external or the statutory auditor, because normally what the transfer pricing is the objective is to evaluate the transaction between related parties and see if those fulfill the transfer pricing rules, and if those are considered the market prices. So that report won't have effect directly on the financial statements. So in those cases, the statutory auditor can be, or the company who has the statutory audit can be as well, that can perform the transfer pricing services. On another example, for the case of the labor services, maybe we can perform as well, being a statutory auditor, we can help the company to determine what will be the effects of an expat that wants to be in Colombia, what it will be the labor and the tax effects of this expat. And consider that the result of that consulting won't affect directly, or even it won't have any affectation on the financial statements. The statutory auditor and the external auditor can perform as well that kind of services at the same time. Francisco, I don't know if you want to share some examples, other examples.
Yeah, sure. I think that here it's important to consider how the extent of the work and the final delivers or decision that comes from this kind of services like tax consulting or labor. For example, as you mentioned, in terms of transfer pricing, it's another kind of examination on the compliance of market rules with the related party commercial agreements. And as long as this evaluation, for example, keeps in determining and just address the range the transaction is being performed, it is a compatible function with the assurance and audit services. But if the advisor of transfer pricing determines the exact margin of the transaction, then it is going beyond the barrier of independence. Those are the kind of considerations you should have when perform services other than the audit.
Yeah, exactly. Thanks, Francisco. And then in the next slide, we are seeing as well some considerations that we have to take when we are acting as an statutory auditor or even an external auditor. So the independence matter that it has to be reviewed even before accepting the job is the financial interest. So the auditor, as well, Francisco explained before, has to be mental and professionally free to perform the job or the activities as an external and statutory auditor. So in this case, has to evaluate if the statutory auditor or external auditor has any financial interest on the company, so they cannot be or act as an statutory auditor because it will be breaking the rules of the independence. As well has to review the family relationships. So you cannot be an statutory auditor or an external auditor when the person in the top management is your sister, your brother, or even your father, or the visa director, direct relationship of family. So you cannot be the statutory auditor because the independence will be breaks because of you cannot be mental, even if you are professional of your services, you cannot be mental on maybe any issue or irregularity you might see on the financial statements and or any other process on the audit activities. The close relationship as well. Even if there is not your family or your relative, you can see as well, or you have to take consideration if there is any close relationship, your fiancé, for instance. So if your fiancé is the financial manager or the finance manager, or even is in the top management, so how you can be the independent on that procedure? So you have the statutory auditor and the external auditor has to consider those considerations before accept, and doing that process at the moment you are evaluating the acceptance and continuance of any client.
Yeah, and it's important to keep this in mind about the organization and the decision makers of the entity, as well as the auditor relationships. I mean, for example, the director of the firm of other of my partners will be close or will have close relationships with the entity's management. If one of my partner, of this partner that has the relationship, has also influence or determines the level that I will be retributed for my work, then he can lead my judgment and it can impair my independence. That's something that also must be taken into account when designating an auditor.
Correct. In the next slide as well, we will see some examples or considerations that we have to take in mind as well when we are evaluating if we are completely independent in order to perform the job or accept the work as a external or statutory auditor. We have to review the public clients. If we are even a shareholder of the entity because of the entity is listed on the stock exchange, well, you cannot as well accept that job because you won't mentally be completely independent to perform the activities. Or even if the entity is not public, but is not public company, you have to check the related parties, as mentioned Francisco. Maybe the partners can be related or might have any interest on the company. So depends on that. We evaluate if we can accept or not the work and perform the services as an statutory or external auditor.
Yes, and it broadens the term of who is the audit client, because it's not only the entity that we are auditing, but also those entities or person that has control over the entity that we are auditing. For example, if we will be hired to support management to prepare the accounting policies for a group, and then one of the subsidiaries will require those to audit their financial statements, even when we had never had any contact with that subsidiary, as we supported the local or the corporate management to guide the accounting policies, we will be in a challenging position to then conclude if the accounting policies followed by the subsidiary are or not in compliance with the accounting framework. As I said, in this case, that could be some strange or remotely happen, can lead to independent performance for auditing our own work.
Correct. So that's everything we have to check and evaluate before we accept any of this kind of job, because any relationship can be directly or indirectly, and it can be affect the independence of being an auditor. I think with this we finalize our presentation. Feel free to send us any of the questions. So Ali, the mic is yours.
Well, thank you so much for both of you and for enlightening us today with this wonderful presentation of statutory audit and additions. You have shared valuable information. I loved it, and I am certain that our audience will have a better understanding of the importance in having a statutory audit in their company. So that's the important things about this webinars that we do. So thank you very much for both of you. And let's go ahead and continue. And let's go ahead and start with the Q&A session. Let me go ahead and pull up the questions that we have. Give me 1 second. Okay. Okay, so we do have a couple. Let's go ahead and start with an easy one. Could the statutory auditor be an external auditor? Okay, well this one's nice.
Yeah. I said the external and the statutory audit performs, in general terms, the same work. Probably for perform or deliver the statutory reports, we need to perform additional work, but yeah, the answer is yes, as long as both functions are compatible, and more than that, are complementary. I think that it's a good practice to have the external auditor being also the statutory auditors, so it can achieve efficiency in the work.
Excellent. Yeah, this is an important question. So, alrighty, let's move on to another one. Can my accountant be my statutory auditor at the same time?
Well, that's a trick question. As we mentioned before, at the same time, it won't be possible because you will break the independence rules as you will performing the activities as an accountant, doing the accounting books, but at the same time reviewing and making an opinion of the financial statement. So you cannot be completely independent when you are performing both activities. So in this case, it won't be possible.
Yes, and I just complement that it doesn't depend on being internal or external accountant. The function is incompatible.
Excellent. That's very important because we have to maintain the independence. Okay, so next question. Let's see here. At what point should the statutory audit plan be carried out?
Well, the
Who would like to
planning on
answer
the
that?
statutory audit, and Fabio, you can complement that also for what is the practice at Colombia, is that is a continuous phase during the engagement. I mean, you must plan at the very beginning when you are designing and agreeing the statutory audit with the client, with the management. You perform additional activities once you have been designated as the auditors. And through all the engagement, you must keep in mind the kind of risk or special transactions or differences or new regulations or new requirements along the audit. So it's a continuous activity during the year.
Yeah, actually, for Colombia purposes, is very similar. It's a continuous process, and the whole year it has to be evaluated all the stage. So it is very similar to being a statutory auditor or an external auditor in this case.
Very well answered. Thank you for both of you. I just have we do have a couple of more questions that I would love to share with you and the audience, but at the moment the time is running out, so we do have to continue. At this point, we would like to end the Q&A session, but remind you to send them directly to us or to the emails that we have here on the screen, and we'll be happy to answer them in a personalized manner and contact you directly and help you any way possible. So if Francisco or Fabio, if you have any other items you would like to share, this would be actually the end. Jay Del Rio, helping companies do business in Latin America, appreciates your interest and remains at your service for any further questions or anything else in particular that you would like to contact us. We are here to help. And thank you so much for everyone for joining us today. It was great having you, and have a great day.